What's going on, everybody? This is Trevino back with another episode, and we are joined by Felix Chavez from beautiful Austin, Texas. How you doing today, Felix?
I'm great. Thanks, Aaron. Thanks for having me on today.
Absolutely. I know we connected a while back, and I'm glad that we can make this happen, and I'm excited for our conversation today.
Absolutely. I've been looking forward to it for a few weeks, and here we are.
Sure thing, Felix. So, for those of us who aren't too familiar with you, would you introduce yourself, please?
Sure. I'm Felix Chavez. I'm the owner of Chavez Insurance Group. I've been an insurance agent for 23 years and started my agency back in 1999. And here we are 23 years later.
Wonderful. And I'm curious, are you from the Austin area, or like what part of the
No.
state are you
Oh,
from?
originally from South Texas, from McAllen, Texas, came to school in this area back in the mid 80s, late 80s, and just never went back. Loved the place, fell in love with the Austin area, and I actually live in Round Rock, and just I spent most of my adult life up here.
Okay, very good. No, I always appreciate the Valley connection. Half my family's from there, so
Got
yeah.
it.
No, it definitely seems like there's a lot of people that will move from the Valley to San Antonio, really anywhere in Texas, but a lot to San Antonio or to Austin as well.
Yeah, it's a great place to be from, but of course the opportunities up here. Austin is the central hub of the state of Texas. There's the state capital and just a lot of different associations that office from here, and a lot of movement happening in this area. Just a ton of growth. I live right between the Hutto and Round Rock ETJ area, so it's just booming like crazy, and we've seen it grow for the last 23 years that I've been in a certain area, but never seen it grow as fast as it has the last 3 to 5 years.
Sure, and I'm curious. I know there's a lot of foreign investment, or I guess not foreign, but just investment from other parts of the state or other parts of the country. What specifically have you seen these past 3 to 5 years? 3 to 5 years, it's maybe a bit different.
Well, right there in the Taylor Huddle line, city line, Samsung is coming in, right? They're already building the plant. There's a lot of talk of a lot of other companies that are signing 313 agreements, and companies that are discussing those options. So you look at a plant like Samsung, they're easy going to bring a few thousand people to work in that facility, from the construction side to the people who are going to be working there. I also spent time in the Hutto ISD school board, so I get to see a whole lot of this growth, right? And we roughly have, just to give you an idea, when I moved into Hutto back in 2000, the city population sign said 1593, I believe. Right now, Hutto is a town of well over 50,000. I mean, the population says 30 something thousand, but it's a lot more than 50,000 people. It's a school district of over 9,600 kids. And just 10 years ago, I think we were somewhere about the 4,200 range. So there's a lot of growth.
Sure, absolutely. Now, I mean, the proof's in the pudding, right? Plenty of people are coming down here to Texas. And I'm curious about you as well, maybe a bit about your background, maybe growing up in the Valley or as a young man, did you see yourself and envision yourself working in the insurance industry, or how did you get into this part of the business?
That is a loaded question there, Aaron, because it's funny. I never saw myself working in sales. I kind of ran away from it when I was in my early 20s. Had an opportunity to work in sales, but fear just kept me from working in the industry. I spent a lot of time working in retail. I worked for HEB, Walmart, and Sam's Club, and ran some stores and did the management side. And it wasn't until 1980, let's see, 1997, 98, a friend of mine opened up an agency in Cedar Park, and we were both captive nationwide insurance agents. And I was his first client. This is before I became an agent. The next nine customers that he wrote were all referrals of mine, people that I knew that I recommended. And he started to put that bug in my ear. And I just thought that insurance agents were, used car salesmen, that mentality. And I just wasn't very interested until about a year and a half, 2 years of him opening his agency. I went to visit him and he was opening up commission checks, and that blew me away. And that was what the motivating factor for me to kind of figure out, what's insurance all about? And you
Hmm.
start learning, the little things. It's about transferring risk from the client over to the insurance company for a fee, but removing that headache, removing that issue of having to pay out of pocket. And the concept really stuck with me. So here I am 23 years later.
Right. No, it's funny that that sort of paradigm shift you had, right? From no, I'm never going to do that.
Yeah.
Maybe it's not pretty or it's not glamorous. I don't know about it, but it's kind of funny how that changed over time. And here you are.
Yeah, absolutely. Especially the first 3 to 5 years, it was you work harder than you ever thought you were going to work, right? Because it's your business, it's your opportunity. You definitely don't want to have any missteps, and you definitely don't want to see yourself struggling, during that period of time. So I work extremely, long hours, and at the time when I was starting my agency, I was also getting married that same year.
Mm.
A year later, year and a half later, we had our first child, the wife and I. So there were a lot of changes in the first 3 years. But luckily, I was able to have a lot of support from my wife and my family and my kids. And this is all they've known me do for the last 23 years. Our oldest is 20, and our second one is 18, two young ladies, and our little guy is 7. So that's all they know that we do is insurance.
Yeah, no, and it's interesting that you mentioned that, Felix, as well as that, a good part of our audience, they are young, entrepreneurs, people who are aspiring entrepreneurs are already, small business owners as it is. And you mentioned an interesting thing about getting married and starting a family. Was that kind of maybe your rocket fuel or your motivation to getting started? Because it kind of seems like a lot of people my age are a bit hesitant to have all of those life changes in such a very short period of
Mhm.
time like you did.
Well, yeah, that was one of the propelling factors, right? I was getting married, but the other thing was I got married a little later in life. I'm married at 35. I married a great lady. My wife is about 10 and a half years younger than I am. And the things that kept on creeping in my mind were little things about health. So I was used to walking around a whole lot in retail, right? And things were starting to hurt here and there, even though I was in pretty decent shape. I knew that I couldn't be on my feet in my 60s. I knew that if I work retail, having a family, having kids, I was going to miss a lot of ball games. I was going to miss a lot of cheer activities. I was going to miss a lot of things in that arena. So I knew that if I wanted to work really hard, especially when the kids were really, really young and didn't need me as much in the beginning as they would need me later on in
Mm.
life, that I could probably get away with working long hours the first 3 to 5 years. And luckily that's what happened. But the second motivation factor was that I had that ambition and that dream and that ability and the opportunity to start in sales years ago in my early 20s, but I ran from it. And I did not want to have fear prevent me from the opportunity again, because
Mm.
I could see that there were plenty of people in the industry that had done extremely well. Started off early, and this is the type of career that there's a lot of renewals, there's a lot of residual income, and that's the beauty of this business. In today's world, you don't necessarily have to have the office spaces that we used to have. I mean, when I first started, I started with a 1,500 square foot office. I ended up having five locations around the state of Texas, three here, one in South Texas, and one in Round Rock, right? And it was different. People would walk in the offices, people would have a lot of conversations with you one on one. Right around 2005, you could start seeing the writing on the wall that people were starting to move away from those things. So things change. So today, you can pretty much run a business out of your home and have no expenditure for employees and overhead of an office. So it's a unique time. It's an opportunity that we've never seen before. iPhones are phenomenal. It's just a great time to be in business, especially in the insurance business.
No, absolutely. And there's a lot of great value in what you're saying. And obviously with technology, it's really enabled us to live in a way that we've never been able to before. And I'm curious as well, it almost sounds like over time you kind of maybe gained a bit of confidence, right? So you kind of talked about maybe that fear in your early 20s compared to when you were 35 and you knew where you were going, you knew what you were doing. Do you think it was more the fear of success or the fear of failure, or what exact fear was it for you?
Yeah, I got to be honest, man. It was a fear of failure. For people, I've read, in plenty of books that there's only two ways to motivate people: a fear of loss, right? Or show somebody what they can achieve and accomplish, and they have this dream and ambition and drive, and they go towards it. But if you look at the stats, there's about a 10% of the population that this motivates them, see something, go after it. Other people have this fear that if they don't make it, that's why they go to work, right? So for me, it was the fear of not making it. You look up, you see your sign, you see your office, it's got your name. And for me, I'm a junior. So my dad is also Felix Chavez Sr. And luckily he's still around. He's 88 years old. And for me, the pride of seeing him walk into my location and seeing his name on there too was huge. So that was a driving force. I've got to live up to having that name be represented and continue to drive business and make him proud. So
Mm,
there were some factors in there, but it was mostly fears. Like I wanted to make sure that I did not fall on the opportunity. I remember, getting hired with Nationwide and coming home or seeing my fiance that weekend and telling her, you know what, I don't like the spot where I'm going. I started in East Austin. I had that location all the way till this March. We consolidated to one location for the need of not having a need for the offices, right? Like we used to before. But I remember telling her, this opportunity opened up. I don't like the location, but it's a door that I'm going to close behind me, and I'm going to get into that door and I'm going to make the best out of it. And
yeah.
it worked out. So we were blessed that we had the opportunity, and we've been able to survive and do extremely well off of that opportunity. And we just we're thankful for the customers and the staff and the people that have supported us all these years. And it's a great ride. It's a really good ride.
Sure, absolutely. And it's seemingly harder for people to take that perspective, right? Everyone wants to kind of be at the finish line, but it takes a good amount of patience and faith, right, to be able to say, hey, I'm in East Austin right now. Let's see where it goes.
But you look at East Austin and look what's happened in the last 10 years. I
Mm,
remember insuring houses there when we first started at 60, $70,000, and that was the amount of insurance we're replacing on these homes. And right now we're still insuring houses in East Austin that we're insuring them for $400,000, and it's a 900 square foot home. It's just amazing what's going on.
completely. No, absolutely. And I mean, let's see, I moved to Austin about 10 years ago. And even then, I mean, it's been incredible just over the past decade to see the amount of growth and change, not only in East Austin, but really the whole area.
Yeah. But the interesting fact is that here we are, right? With two guys in the insurance industry. You're with one company, I'm independent, right? So we both represent a lot of the same companies, and we're both affiliated with two different groups. But there's a lot of business for
Mm,
both of us and for a lot of other agents. If you look at the average age of an insurance agent right now, I think it's in the high 59, 58 bracket. So that means that this industry needs a ton of young people to replace all the guys that are going to be retiring. I'm 57 years old. I want to be able to do this until I'm 64, 65, something like that. I love what I do. It gives me the freedom that I've always dreamed about, to be able to drop off the kids. I told you we have a 7-year-old son, we have two daughters, and every morning I leave the house at 7:10 to go drop off the little guy. My wife goes and picks him up. I work from home 2 to 3 days out of the week. I will run in the office once or twice a week, spend time with the staff, and spend a lot of time outside. So I see my staff that, people in my team that want to become agents and want to have their own opportunity, and some of them have it. Some of them have that ambition. And I see a lot of people in their 20s that could do extremely well. And that's where we need to find good, capable people that can drive this industry, because that's what we need in this industry, is a lot of young people.
absolutely. And Felix, I didn't know that. I didn't realize that the average age was so high for insurance agents.
Yeah. Yeah. So like I said, I started 23 years ago. Most of the guys that I started with, that I saw on a quarterly basis as I went to meetings are already retired, they've sold out, or someone else in their agency has taken over for them. I would tell you that out of 20, 30 guys that I kept in touch with when I first started, probably 80% of them are now retired. They were a little older when I got started in my 30s, 35. Most of these guys were already in their late 30s or early 40s. So time flies, and it's a great opportunity for young people to be able to take the reins of the industry and get into it and enjoy the fruits of it. And along the way, you can't become an expert at everything. So we do a lot of auto, we do a lot of home, we do a lot of commercial insurance, but I love life insurance. Life
Mm,
insurance is where I really shine, where it really motivates me, where the passion flows, where you see that you actually help a family plan for later on in life. I mean, you can take a child today that's 10 days old, get them a life insurance policy that has all these bells and whistles, and when they're 60 years old, they got a ton of cash sitting on in an account, and you can make a policy grow with them. It's just stuff that you've never seen before, and it's important to be able to help families. And as I mentioned earlier, we do a lot of things. You can be an expert at about 3 to 5 things in our industry. Once you get past that, it's really difficult to understand everything. So I stay away from health insurance. It's an
mm.
animal that is difficult. It changes a lot every year. Just don't enjoy it. So I'd rather
Mm.
refer that kind of business over to somebody that is an expert at it.
No, of course. I mean, you want to know, what your niche is, right? What you're good at, how you can serve people. And it's interesting as well. We're talking about this because when someone thinks of insurance, at least down here in Texas, maybe you think home, auto, flood. If you're doing construction, maybe builder's risk, and you see the premium amount, and okay, hey, I'm going to pay X, right? Whereas with life insurance, it's a bit different. So maybe for somebody who's open to the concept of life insurance, they really don't know much about it. What should they know about life insurance?
Well, in today's world, life insurance is very broad. There are a lot more selections for someone now, a lot of choices in life insurance compared to even 20 years ago. Rates are a lot better. Mortality rates, what I mean by mortality rates is that actuaries and there's companies know the lifespan of a male. They have it in a formula. They have it to a science. They have the same life expectancy for a female. So most people don't know that females pay a better rate at the same age bracket than a male. And people are living longer. So there are choices in today's policies that allow you to have things that you've never seen before. So, I was a captive agent with Nationwide for 19 years, 18 and a half years. And I went independent 3 years ago, more or less 4 years ago. And in the process of going independent, we started to find other carriers, and we just felt like most of the companies were kind of the same, from one company to the other. The underwriting was a little bit of the same. The processes were kind of the same. And then we stumbled into a company that offered living benefits. And if you can imagine, you see this on a daily basis. Maybe someone has a terminal illness issue and they don't have any coverage for that anywhere. Their health insurance is fantastic, but it's not going to pay them money up front when they have a life expectancy of 24 months or less.
Mm.
So you can find these type of coverages and policies. Not a lot of companies offer them, but a few companies out there offer those kind of coverages available inside of the life policy. So it's a really unique industry, a very unique spot in the insurance world, as we can do a lot of different policies and different products to protect family. There's nothing like life insurance because it can really set a family ahead of the game by a long shot.
Sure, absolutely. And me personally, I personally don't know much about life insurance, but one term I hear is the word term, right? So could you explain, what exactly term is in regards to life insurance?
Sure. Term insurance is a product that is pure insurance. It's got no bells and whistles. It's got no cash value, right? And it lasts just the time frame of the term. It can be a 10-year term, so it's a guaranteed rate for that time frame. It can be renewable on a yearly basis, but that rate is going to be going up every year. So the beautiful thing about life insurance is that the younger you are, the better the price. The healthier you are, the better the price. But the term product can be purchased in a 10-year, 20-year, sometimes 15 years, depending on the company, and even up to a 30-year. Especially if you're under 50 years old, you can still lock into a 30-year policy. But there's only really two reasons to have term insurance. One is it's a temporary need, right? So what can be temporary? Well, maybe you just purchased your home, you have a 30-year mortgage. Maybe you're a new family, right? A young family in their 20s, and you're about to embark in a life of kids and a dynamic that changes. So the family and especially the kids are going to depend drastically on your income to be able to sustain that family for many years. Or maybe you're a business owner that is looking for protection for a key person in your business, or that if something happens to you, that the spouse or the family has enough income to be able to overcome the loss of the owner of the business. So it's a temporary need, right? So anytime you look at that, you either buy it because it's a temporary need, or you want to be able to maximize the most amount of coverage for the least amount of price. And those are really the two reasons that you want to buy term.
Sure, absolutely. And maybe term would be one product. Are there any other types of products that are similar to that in the life insurance industry or?
Not very similar to the term. I mean, we have whole life in the industry. That's one of the one of the oldest, actually the oldest life insurance type in the market. It's been around for a long, long time, back to the Columbus ages, you know. In today's world, we have what is the most popular type of product, and that's the index universal life policy,
Mhm.
because you can do a lot with that policy. You can it's so flexible that you can overfund it, pay a little bit more so you can save more. You can grow that death benefit, that coverage amount. You can start off with a lower amount and increase it on a yearly basis, and kind of follow your pattern of life as you get older. In some cases, you need more because you need more life insurance because you have more things to protect. Or you're planning for different events in your lifetime. Maybe you want to be able to have a secondary or third source of income to be able to draw from. There's some beautiful things that you can do with life insurance on the index side where you can draw money out of there without paying taxes on it for a short period of time or a longer period of time. It's very flexible. And one of the coolest things that you can do with Index Universal is that you can also overfund it, but then stop paying at a certain age and allow that policy to continue active even to age 120. Here's an interesting stat. Most people say, well, am I going to live to 120? Well, scientists are telling us today that the first person that's going to live to 120 years old is already walking this earth. They might
Hmm.
have been born yesterday. They might be 5 years old, but life expectancy is a lot longer than what people thought it would be. So with that said, people are also going through a hard time in their late years because, the body's not the same anymore at that age. There's more expenses. There's issues that we all have to fight, cancers and heart attacks, and a lot of different aspects of protection that you can get through living benefits and life insurance. And it's a plus for people to be able to look at that and be able to find an option that works for you. It might be term for a family. It might be whole life for someone else that doesn't want to take any risk and wants the best protection. Or it might be a flexible policy in the index world because it's got a lot of bells and whistles and you can add living benefits in there. So it's a unique product that you can weigh out your needs and find out how it can balance for you and your family.
Sure, absolutely. And that's interesting as well. I didn't know that about, the 120-year span, even someone walking the earth now, they could live to be 120. It's
Yeah,
incredible. No, and
absolutely.
I'm curious, sorry, if you could maybe repeat that part. You had mentioned how in that particular policy or strategy, you're paying into it until a certain point, and then beyond that, what would happen?
So I'll give you an example. Um, Back a year ago, I work very closely now with a company called National Life Group, the second oldest life insurance company in America. And I have access to a lot of companies, right? I represented nationwide for years. Great company. But National Life Group started living benefits inside of their life policies for a fee back in 2007. And if you look them up online, they get the credit for being the company that started living benefits built into their life policies. And what is that? I mean, it's a terminal illness payout, it's a chronic illness payout. Somebody has dementia, or they can't move, they need assistance, kind of a long-term care need. That's a living benefit. Or a critical illness where they have a heart attack, cancer, or a stroke, or even if they have a critical injury where they might have had a traumatic brain injury. Accidents can be really, really difficult. So, what this policy allows you to do is to be able to take some money out of the death benefit for a need today, especially for someone in a terminal illness issue where they might not have more than 2 years to live. Their expenses are going to be through the roof. Compliances in the house of being able to change doors, make them bigger, there's a lot of stuff there. But the cool thing about this is, you know, a year ago, I took all my life policies and converted them into my kids and everyone in the family into this company, National Life Group. So my 7-year-old son, his $100,000 life policy really cost me about $33 a month. But I decided to overfund it, and I pay I think $110 a month for his.
Mhm.
So what it does is it allows that 100,000 to be growing in coverage every year, but it also allows this bucket inside of the life policy called cash value, that every time you make that $110 payment, it pays for the risk of the $100,000 coverage, but the rest of the money falls into this bucket. And this bucket is earning close to 6%. It's
Mhm.
index. It's not in the market. It's a mirror of the market. So when the market's up, you're up. But when the market's down, you don't lose any money. You stay at zero. You might not make any money that year.
Mhm.
So what it does is that it builds enough cash value because you're overfunding it, and it allows for a lot of choice with it, right? So if you want to draw some money out of there later on, you can. If you want to use it like a bank where hey, you want to buy a house and you got $30,000 in there and you can drop it into a down payment of a house, you can do that. If you want to pay that money back, you can do that and pay yourself interest on that. So it's very flexible. But by the time this little guy turns 60 years old, he'll have a little bit over $1 million in cash value in this policy. So at that point, at 60 years old, we decided that's it. There's not any more contribution unless, let's say he gets to be 30 years old and he's out of college doing extremely well, and he wants to contribute instead of 110. He now owns the policy and it's in his hands, and he wants to put $200 a month and see what the policy does in growth. That's going to be his choice. But
Mhm.
I've set him up in a way to where he will never have to worry about life insurance again, because he's got a policy that was purchased when he was 6 years old, and he's going to have a very long life to be able to figure out what he wants to do with that, how he wants to grow it, and how he wants to use it. So I've set him up for success, and that's what you can do for families at a very minimal expenditure and stop paying it at certain ages. So we stop paying. We program the policy not to charge him past 60 years old, and it actually goes all the way until 120 years old, and he would have somewhere like $4.5 million in cash value if he never touched it, and he would also have somewhere about $4.5 million in death benefit. So it's a fantastic product. We'll see how long he lives, right? How long God has an opportunity for everyone, and hopefully he's got a very long, fruitful life. So we'll see.
Sure, absolutely. And it's funny, anytime someone brings up, 120 years or something like that, I think there's probably very few people on earth who have lived that long. But
Yeah.
I guess the first thing someone would think of is, all this is too good to be true. And I guess maybe that's a valid statement, right? So why do you think more people don't know this or aren't educated about this?
Well, to tell you the truth is that the agents in the industry, people like me, that have agencies that have concentrated a lot of their time into auto and home, because that's where most of their contracts are, in auto and home. And they don't really have a whole lot of choices with life insurance. So they're not very well educated. If you look at the life insurance, if you look at insurance agents as a whole across the board, the mom and pops that are selling auto and home commercial, they sell very little life insurance. So if they don't know a whole lot about it and they don't specialize in it, the public is not going to know a whole lot about it either.
Hmm. Yeah, no, and there's a lot to be said for that too, right? I mean, I guess, like you said, maybe they focus mostly on the home, auto, flood, whatever it may be. and maybe they, weren't able to verbalize as much as they wanted to with life insurance.
Absolutely.
Sure thing. And I'm curious as well, let's say someone, I don't know, maybe they started their policy at 25 and then maybe 5 years later they get married. Would that affect the premium at all, or is it I guess upon getting married, I guess you're probably encouraged to have your family do the same to kind of be able to tap into those funds eventually?
Yeah, there's a rule of thumb, right? I mean, we advise clients that they want to look at their life policy every 3 to 5 years, preferably every year if possible, right? Because needs change. 20 years old, you're probably not married. You don't have any kids. At 25, you might be married, have some children, maybe purchasing your first home, so you have a mortgage. So the needs change, right? So maybe you had $100,000 life policy to begin with because it was just you. So in most cases, most companies make you reapply for a new policy for new coverage. But now you're basing that rate not at the 20-year-old age when you purchased it, but the 25, 26, or 27. The same company that I'm talking to you about, National Life Group, has this built-in rider if you want to purchase it, and it allows you to lock in the rate at whatever age you purchase it, especially if you're in your 20s, and be able to get 5, 10, or 15% more in coverage every single year, but guaranteeing that extra coverage based on the age that you started the policy. So for a little bit of a fee, you get an incredible opportunity to be able to buy more life insurance without having to go through underwriting again, without having to go take medicals, without having to go through all that headache of redoing a policy. So it's a real unique process. And I've never seen any company offer that besides National Life Group. And over the last year or so that I started to represent them more, if I sold 60, 70 life policies a year, I'm probably selling 90% of them with National Life Group because they have a tremendous flexibility in me doing all the life policies through a Zoom call and having the customer sign. 90% of the cases, they're not doing any exams. They don't have to go to a doctor. A nurse doesn't come to them. This company seems to be pretty good about looking at the 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 underwriting criteria of the MIBs, the Medical Information Bureau historicals of someone going to the doctor, the medications that they take from the prescriptions, and kind of making a judgment on that client. And they're flexible. When I say flexible, I mean most companies will tell you, hey, if you've had cancer, we're not going to be able to allow you to even get insurance for the next 15 years. We'll deny you. These
Mhm.
guys have a 5-year window. So it's an unbelievable opportunity for people that are looking for it. Not everybody qualifies, right? But most people do, and that's a huge, huge benefit.
Sure, absolutely. And that was probably my next thing as well is, how do you know if you qualify? But it sounds like most people will be able to qualify for this, right?
You kind of know, after you've been doing this for a while, you get a sense for who people are and what they're telling you. There are a lot of questions in the application. It's not overwhelming, right? But it's the basic stuff of, who you are, what your date of birth is. But there's also an issue with knowing your family history, right? So insurance companies want to know that. And if your parents have passed away prior to age 50, 55 for cancer or ailments like that, that's a history that's probably in your family. So if you're in the best shape of your life and your ideal height and weight combination to what they're looking for, you might not necessarily qualify for the best top of the best rate. You might qualify for the second or third best rate because of the historicals.
Mm.
So we never know. We're not doctors, but you get a good sense for what people are telling you and the information that you pick up on the application. But the other thing is most people don't understand who to list as beneficiary or beneficiaries or secondary beneficiaries on the policy. Most people say, "Well, I want my kids." That's the last thing you want to do,
Mhm.
especially if they're underage, unless you have a will or you have something solid set up for them to where they know that transactions are going to happen when you're no longer there exactly the way you want them through the court systems. But the last thing is you don't want to go through this process of not being here anymore and not having a will because it goes through probate. And a lot of the families lose 30% of that money immediately because of taxation and court involvement. It's just not the best thing for families. So we always talk to people about beneficiaries. List a loved one that you trust. It can be the spouse, it can be one of your older children, it can be a sister, it can be somebody that has a vested interest in that family that's going to be able to take care of the things that you wanted to get done when you're no longer here. And there's nothing like having it on a will or on documented where it makes sense for the family.
Sure. No, and that's an interesting part that I didn't think about, right? Because, the first thing I would think is what you just said, why not just leave it for your kids? But it's interesting as well that, it also comes into play. Not everyone has wills, right? Get
Yeah.
stuck in
Yeah.
probate, then you have a problem.
And there's a company, I forget the name of them, but I think it's called Marshall and Will or something like that. It's advertised on TV quite a bit. You can get a will easily done. I went through their site and just looked at how easy it would be and how long it would take to get a will. And in less than an hour, you can have a will that's rock solid and pay less than $100 for it. It's
Hmm.
a really easy process. Um, but some of the other things that you also think about with life insurance is when the person planned out that at some point in their life they were no longer going to be here. That's the only way in America that I know that you can leave a ton of money for a family and not pay a dollar in taxes when you receive it. So if you left your home, your cars, your bank accounts, your business, guess what? All of those things are taxational events for the family. But a life insurance policy, the proceeds of the death benefit are written in the law and respected to this day that they're not going to be taxed. And that's a huge, huge step up for families.
Hmm.
So more people should take advantage of that. And, you know, we should be able to see families having life insurance across that they own, because a lot of times they work at traditional jobs that the companies are trying to do the best thing they can for them, but providing benefits, right? They provide health insurance, they provide other items in there, but they also provide maybe a term group policy. Those are very inexpensive. And I always tell people, look, go back to your HR person tomorrow. And if you're not maximizing the most amount of life insurance you can get, tell them to get you the most, because you're buying this policies pennies on the dollar. They're very inexpensive. The only problem is that you don't own them. They're not portable. You can't take them with you when you leave that job. And a lot of people end up in these jobs 20, 25, 30 years. And every year that they didn't purchase a policy outside, they're older and it's
Hmm.
costing them a lot more money. So I'd love to be able to I wish I could get to everybody in their 20s, in their teens, their families that have kids at 10 days from being born, because that's when you can really help them. That's when you can really do magic for them. It's hard to do magic for someone unless they're paying a lot more money and they can afford it when they're in their 60s, 70s.
Sure, of course. No, and that's I mean, you may as well, get started when you're young, right? It only
Yeah.
makes sense.
Absolutely. So hopefully your podcast is hitting a lot of young people, because those are the people that we can help in a much, much easier fashion, that they can really extend these benefits a very, very long time, and they can plan for events down the road that they might have never thought they were going to suffer through. But that's the benefit of having life insurance, that you have these preset plans built in there that can be a huge help for families.
Sure, absolutely. And, there's not only young people in our audience, also a lot of, people who are, active in real estate and construction as well. I know you mentioned something earlier about kind of tapping into those funds to buy a house. Do you think that life insurance is also a vehicle for real estate investing or maybe doing construction too? Or
Absolutely, but it's not a short-term vehicle, okay? Because there are charges in those accounts. So if you dump a lot of money into a life policy, that you can't dump a ton of money into a life policy, because there's some parameters, right? The rules don't allow you to turn a life policy into an investment unless it's growing in the death benefit, and there's a lot of things in there, right? But uh, you can start a life policy for the case of having cash value and growing it to where you're going to use it down the road, or you're going to have a benefit from that. As a matter of fact, you can almost use it as a bank, right? So if you have this account that you're going to be able to draw money out of there and put it back in there and continue to do that over and over again in a lifetime, it's a great vehicle. Especially when you start seeing some of these numbers that these accounts are paying almost 6% on a yearly basis. Well, hell, if you look at the stock market over the last 10 years with all the ups and downs, guess what it's paying? Right around 7%.
Yeah.
And you're taking all the risk.
Mm.
So it's a great way to invest money, but it cannot be your only source, right? So if for a person is well set, they might invest in the market, they might have a 401k, they've got a life insurance policy with cash value access, invested in real estate. It's a great tool.
Mm.
I know plenty of people that are in the multifamily business, in the apartment complex business that dump quite a bit of money in cash funded universal index policies because it worked for them.
Absolutely. Well said. It definitely sounds like the proof's in the pudding, Felix. Well, is there anything that you haven't said for us you'd really just like to hit home?
I'd like to tell you that we can help every family, right? That there is a policy for every family. And there really is. Sometimes the amounts can be smaller because that's what they can afford. Other times they have a big window of opportunity and finances are not an issue. But we really serve a public that is between $75,000 in household income to about 150,000. And why I say that is because most of the people making $150,000 and higher have financial planners. And those guys are pretty good at that. But some of the people making less than $75,000 in a household, it's kind of difficult for them to put all the ducks in a row when it comes to the finances and have life insurance and everything. We want to help everybody. But 60% of the population falls in that category. And guess who are the ones that are the worst underserved in our market? It's that population
Mm.
because they think I'll buy it tomorrow. Look, if I could tell you stories of 23 years of talking to families and consoling, people in the family that have lost loved ones, I could write a book about it. But it's about helping families that you're never going to a family with a check on a great day for a life insurance proceed, right? You'd rather have that person there, but it sure feels like in your heart you did the right thing for the family because you know the struggles that the family's going to go through as they go through the process of grieving and trying to figure out how they're going to go forward. Money's not the solution to everything, but it sure helps. It helps tremendously to know that you're not going to have to worry about your pocketbook when you have issues that we can't control. And it's life. That's what happens in life. So I would encourage everyone that hears us in this podcast to please call us. If not us, call your insurance agent, your local insurance agent. See if they can help you. And if they can't, and you're looking for living benefits, please call me. Call me. If send me an email. I think you're going to post all our phone numbers and all the information. I'd be happy to have a conversation, even if it's a non-committal conversation where you just want to know. My job is to help you understand this, just like your job and our job is to help people understand how these processes work through insurance. At the end of the day, we do one thing, and we do one thing really good. We transfer and we take that risk away from you and place it on the company. And that's all life insurance is.
Absolutely. That's a great way to wrap up, really just, transferring that risk and obviously, when the time comes when you need it, it's there for you. And like I mentioned, I'll definitely have, your information in the show notes. So if someone wants to get a hold of you, it'll be there as well.
Thank you, Aaron. I appreciated being on your podcast today, and I look forward to working with you and seeing us grow together.
Likewise, Felix. No, it's been a pleasure. I've learned a bit more about your background, how you got into the business, also a bit about your journey, and also explaining life insurance to us, which I didn't know much about before, and I feel a little more well equipped to be able to kind of navigate those waters, and of course lean on you, for those tough life insurance questions when they come, right?
Absolutely. Anytime.
Okay, sounds good. Well, thank you so much for coming on the show, and we'll talk to you later.
All right. Appreciate it. Thank you.